Has the Dubai real estate market finally hit the bottom? 10, 15, and even 25% discounts on off-plan properties are happening right now. Or is this just the beginning of an even bigger drop? In this video, I'll share real financial terms the developers are quietly offering, show the latest data analysis illustrating the hidden market dynamics, and make a prediction on the future market trend. Starting with the developers' new offers. Here are some examples. Developer 1, just 1 to 2% discount. This works for their current stock, and they're also launching a new project soon. Developer number 2, 1 or 2% discount and an improved payment plan, 40/60 instead of 50/50. This developer has no available stock, but one of their projects is currently at the pre-launch phase. Now things get more interesting. Developer 3, 50/50 payment plan instead of standard 70/30, and around 7% discount instead of usual 3 to 4%. Developer number 4, up to 15% discount and 50/50 payment plan. Normally they have a much stricter one. If you pay full cash, you can get an even higher discount, up to 25%. And also it's possible to get kind of DLD waiver, DLD cashback. You'll get the 4% fee back when the construction is completed. Developer number 5, 4% DLD fee waiver. Not all of their buildings are applicable, but most of them are, and they normally have 50/50 or 60/40 payment plan. Now they change this, and buyers can get 30 to 70 or 35 to 65. With this information, potential investors are divided. The first group sees this as an opportunity to buy at a lower price. But I want to warn you, you need to be careful what you invest in, because the fact that the property got a discount doesn't mean that that's a great investment. Some developers, they are not on the list I just showed you, but there are some in Dubai, that were giving such discounts even before the war conflict started. And not all units are great. So if you want to learn about the strongest opportunities available right now that are coming at a discounted price, drop us a WhatsApp message. There is a link right below the video. But there is also another investor group, and there are numerous investors like that, and they think that these discounts, they're not enough. We get many messages from potential clients expecting bigger discounts. I want to read one of them, it's a quite poetic one. Let the developers live in their dreams and realize later the true potential of their stock. They need to come down from their high chairs and face reality now on ground zero. But I have a contrarian take on that. And my opinion is that the current off-plan prices are the lowest that investors will get. Waiting for several weeks or several months will not help. Let me explain why I think so. And first, I want to ask you a question. Why do some developers offer discounts and others don't? I mean, in the current situation. Because it's not like all the off-plan prices went down, right? Let's take a look at the list of special offers once again. Developer number 1 is a very big developer, one of the oldest builders in Dubai. They have a lot of cash. Why would they reduce the prices? Developer number 2, it's a boutique developer. They have a very limited number of buildings under construction, and their payment plans, they're structured in a way that allows them to collect all the money needed for construction during first year or a year and a half. So again, they don't need to drop the prices. Developer number 3, it's a very good mid-sized developer. They post all new launches, so they're not launching anything new right now, but they have some available stock. The thing is that they sell roughly 90% of all available units during the first sales day, and now they have some leftovers. They don't have top units in stock, so buyers who are getting those discounts are getting only those units. Developer number 4, and their business model is much more quick cash dependent. They invest their money in construction before they start selling. So for them, it's important to get new cash now. They cannot just wait it out. They have a lot of projects under construction and many units available for sale. So they just need this money fast. And the bottom line is, those developers who are in a strong cash position, they're not offering discounts. Those who need cash urgently, they are. And this brings us to point number 2. As most good developers feel pretty comfortable in terms of cash, they will just not launch new projects. Because most good Dubai developers, they're pretty strong in terms of their financials, and they don't need cash. They will not destroy their margins. Why would they decrease the prices and make less money when they can just wait? And we already see it happening. The number of new off-plan projects launched in Dubai is now significantly lower compared to what it was before the conflict started. The first 2 weeks of March were pretty normal, but now the numbers are quite low for Dubai. It doesn't mean that all of them will stop new launches completely. My guess is that big government-backed developers will keep launching new projects from time to time. They may offer better, more relaxed payment plans, but they will not decrease the prices, because of 2 reasons we just discussed, and the reason number 3. And the reason number 3 is that increasing discounts is not viable from the economical point of view. So what's happening now is that we have a bit of an oil crisis. Oil prices are rising, and this leads to higher inflation rates. Inflation rises global prices, and this, of course, impacts the construction costs. Plus, war activities in the region affect the logistics and the supply chains, and that again impacts the construction costs. So, growing construction costs make their margins lower, and they will not make them even lower than that. They will not sell at no profit if they can just wait it out. And we kind of seen the same situation before. The last global downturn was during COVID. So let's take a look at this chart showing the average price per square foot for off-plan properties during COVID. What you should know about off-plan transactions is that they don't get into the database right away. There is a time lag, roughly 2 to 3 months. That's why prices in April, May and June were pretty flat. The decrease is visible in July and then in August. And these discounted deals were happening somewhere around April and May, in the first 2 months after the global lockdown started. Then the prices were pretty flat again. And I'm not saying that we're gonna see exactly the same dynamics, because these are different events, and we don't know how long it'll take until the conflict finishes and until the things go back to normal. But my message to deal hunters is that if you don't like current off-plan prices, I mean the reduced prices after discounts, and getting normal prices with improved payment plans doesn't excite you too, then off-plan investing is not for you right now. With secondary market, it's different though. In my opinion, if you want to get lower prices, it makes sense to wait a bit longer. I'll explain why later in this video. And now I think is the right time for data update. Let me show you what data tells us, as it's been 1 month since the conflict started. This chart shows the ready listings dynamics for apartments, villas and offices. And we're looking at listings because they're quicker to show market changes. Transactions take longer. So what we can see here is that the number of listings for all types of properties is either in the normal range or close to normal range. We look at this data to see if there is panic selling on the market. Because if they were, more and more people would list their properties. But what's happening in reality is that those who are not going to sell, they're mostly not selling, and those who were going to sell are listing their properties and hoping to get fair prices. We see the same trend across different areas. Almost all of them are in the normal range in terms of numbers of new listings. But what we can also check, given that it's been a month since the conflict started, is real transactions. Because secondary market transactions, they're quicker to appear in the DLD database. And we think that the last 2 weeks of March actually illustrate the reality. And it is that the number of ready properties transactions actually went down. They're roughly at 50% of normal level. This chart is not for prices, right? That's just for the number of transactions. And what it tells us is that sellers are not willing to sell at reduced prices. Buyers are looking for reduced prices. So there is a certain gap in expectations. And that's why we see that the number of transactions went down. What's interesting though is that ready properties prices based on transactions that were registered during the last 2 weeks, they haven't gone down. Look at this bar chart. The first bar illustrates a long period, since December 1st to the middle of March. The second bar is the period right before the conflict started, the last 2 weeks of February. So prices in those two time periods, they're roughly the same, 1.6 thousand dirhams per square foot. That's average for ready properties in Dubai. And now let's look at the third bar. Transactions prices for properties sold during the last 2 weeks of March. And the prices are pretty much the same. They're even higher compared to what we saw several months ago. And for villas, it's a similar picture. Current average price per square foot for villas during the last 2 weeks of March is higher than it was several months ago, but a bit lower than it was right before the conflict. So now we have real proof, registered transactions, that are showing that ready properties prices are not dropping. You might be wondering why and will this change? So let me show you another graph. This chart is for ready market prices, average prices per square foot for ready properties in Dubai. That's the COVID period. Unlike off-plan properties, here transactions get into database much faster. So we see that right after COVID started, right after lockdown started, the prices were pretty much the same. So we had roughly 1 or 2 months of flat prices. But then they started going down, and in 5 months period they were minus 12% compared to the normal level. And we think that now we're gonna see something similar, because those who can wait will be waiting. But those who wanna sell, those who wanna exit, those who urgently need money, they will start selling at some point. Now sellers wanna sell at normal market prices, buyers wanna buy at minus 25% versus market prices, so they should meet somewhere. So those investors who wanna benefit from this uncertainty and wanna invest in the secondary market, I think you should wait a bit, but also beware that most good units, they will not go to the market. Those investors who have good assets know how valuable they are, so if they can, they will not be selling. It was the same case during COVID. And now I want to show you something else. And this data might surprise some people, but might also confirm some people's observations. Let's take a look at rent transactions. Real quick, I want to show you the price dynamics. First for renewed contracts, and you can see that prices are pretty much the same, they're in the normal range. Then for new contracts, and the prices are the same for offices and apartments. There are some fluctuations with houses, but I wouldn't pay much attention to that, because this category includes both cheap townhouses and ultra-luxurious villas, so fluctuations are normal. What's really interesting is the next chart. It shows the number of renewed contracts, and you can see that it is lower than it used to be. The trend is more or less the same for all types of properties: apartments, villas, and offices. We checked how it looks for different areas, and the trend is pretty much the same. In almost all areas is lower than it was. Now new contracts. And here the drop is even more significant. It's obvious what's happening with relocation to Dubai. And of course, new residents, new population coming from other countries to the UAE. Those who were moving to Dubai, they were forming the demand for new rental contracts. Some property owners, those who wanted to rent out their properties now at this stage, they already felt this pressure. And there is one more investor group who's gonna feel it. Those who are off-plan investors and those whose handover dates are coming soon. It's gonna be harder for them to find tenants. They're gonna have larger competition. And it's quite likely that this is gonna lead to reduced prices. I think the group that will find this situation most challenging are those who wanted to flip on handover. Because now flipping at handover with a premium is problematic. Renting out quickly and at a good rate is hard too. But even for these investors, there is a solution. There are financial instruments that allow to break down the handover payment into many much smaller payments that can be paid over many years. And we're also helping those property owners who own ready properties but urgently need cash. And if you don't want to sell at a lower market point, or you want to get the cash and invest it while there are good opportunities on the market, let us know. We're open to helping clients with all kinds of real estate investment challenges, just like we helped this Canadian investor. Check out our consultation.